Hi everyone and welcome back. Today we're looking at the Wellington marketplace, particularly with the question, is the Wellington market overpriced? Is it overheated? Are we in a property bubble? We're seeing a lot of reports in the media saying the Wellington marketplace is hot. We're seeing a lot of buyers complaining that houses are very, very unaffordable. It's too difficult to buy property in Wellington. But is it overpriced? Is the Wellington market gone too far? And the answer, from my opinion, is an emphatic no. The Wellington housing market is not overpriced. We are, in fact, in my opinion, at the starting phases of a growth cycle in the market. And we'll look at some data now to validate or verify my opinion. So firstly, I want to look at the New Zealand market on the whole in terms of the normal cycle. So normally it grows for a while, it's a hot market, and then it's a cool market, it flattens off. It's a hot market again, then a cool market. So going back to 1992, across New Zealand on the whole, we grew for about 6 years, and then flattened off for about 4 years. Then we grew very steeply, 2002 through to 2007, for about 5 years, followed by 4 years of a cool market. And then we've had a relatively hot market for the last 4 years. But please bear in mind that that's mainly been driven by Auckland, Christchurch and perhaps Queenstown. Those markets have grown aggressively, whereas the rest of the country has not really. But on the whole, well, New Zealand has been in a growth market for about 4 years. So that's the normal pattern. If we look at what's happened in Wellington, then it's followed that pattern to a degree. But of most interest, look at the most recent 6 to 12 months. Wellington is the green line, Auckland is the blue line, and Christchurch is the red line. You can see there that the Wellington marketplace goes up, and then it goes up steeply, then it flattens off. It's only been going up again for less than the last year. So typically a cycle might last for 3, 4 or 5 years worth of a growth phase. We've been in a growth phase in Wellington for less than a year. So by historical norms, we've certainly got another year or 2 or 3 of growth ahead of us. Doesn't necessarily mean it's going to happen. We don't have a crystal ball, but that's what history says is normal. If we look at Auckland versus Wellington, this shows us dramatically that Wellington is not overpriced compared to Auckland. Going back to 1992, the gap between 1992 and 2002, you can see there again following the blue line, Auckland goes up in value and then flattens off. Wellington is the green line and it just tickles up and eventually catches up to Auckland at the end of the boom market. Then Auckland races away again and Wellington eventually catches up again in about 2007, 2008. So typically Auckland will go ahead of Wellington, but Wellington will catch up in the end, relatively speaking. In the last growth phase, Auckland was flat and Wellington was flat until about 2011. Then Auckland took off and Wellington has only just taken off in the last 6 months. So if indeed history repeats itself and Wellington does catch up, relatively speaking, to the Auckland market, you can see there is a huge gap to bridge there. In fact, Wellington could grow in price by about 50% before it catches up to where Auckland is, relatively speaking. I'm not saying that will happen. That is what's happened in the last couple of cycles, though, in the last 20 to 30 years. And if that happened, Wellington would need to grow by about another 50% in value. So, again, this doesn't necessarily say what is going to happen, but if the history repeats itself, Wellington has got a fair way to go yet in the current boom cycle. Hope that's useful. Good luck out there. Thanks. See you next time.